here in the OTC market, the penny stocks. You could take a penny stock company at 10 cents, and it's easier for a penny stock company to go from 10 cents to $1 than it is for Amazon to go from $1,500 to $15,000. See the difference? High risk, high return, but that 10-cent penny stock could just as well go to a penny. So what's your risk profile? What's your appetite? Very important, but the process of going public is what I want to talk about. This is where we're really going to move into blockchain and tokens and crypto versus traditional stock. So I distinguish things very simply. Bitcoin to me acts like gold. And I won't go into it. We've done a ton of podcasts on it. We can do it later. But it acts like gold. It's a specific unit. A brick of gold's $500,000. A unit of Bitcoin's 50,000, more or less. It's dropped some, but it's as a percentage, it's still there. Cryptocurrencies are not currencies. They're crypto tokens, or technically now they're being called altcoins as alternatives, no longer being called currency. And to me, the altcoins, cryptocurrencies are not currencies at all. They're glorified penny stocks. They're a tradable token or a tradable asset. Why is that important? If you have a company and you want to go, quote, public on the OTC market, there's one way you can do it is you can grow a little bit and you can go along the lines of a small company, but you can go public on the OTC market very quickly with very little structure and product and profits, not like a New York Stock Exchange with 10 years and $100 million. You can also what's called reverse into another existing company. There's a lot of what are called reverse mergers, an existing public vehicle that wasn't doing well, and somebody will sell you that public vehicle. You merge your company into that public vehicle. The benefit is that vehicle has already gone through the registration process of going public, which is very expensive. But the benefit of an OTC, again, we're dropping a bunch of acronyms, is on an OTC, you can do something called a DPO. What is a DPO? Unlike an IPO, an initial public offering, an IPO in a big company stock exchange, New York, usually has investment bankers, which are a group of guys who get a percentage of the stock, and those investment bankers go out and try and sell the stock to their customer base. A DPO is a direct public offering. Very simply, it means you potentially market your stock directly to the public or directly to your customer base, bypassing the investment bankers and all that legacy infrastructure. Now, you can do direct public offerings more easily now because, again, the internet has brought about things that didn't exist before. We can run publicity and promotion, but you've got Telegram and WhatsApp and social platforms and all kinds of ways to potentially communicate. Or in an even better sense, Coinbase, which any of you that are watching blockchain, Coinbase went public. They, in my understanding, did a DPO, a direct public offering. Coinbase had millions and millions and millions of existing customers. If you have an existing customer base or an existing fan base, you can do a direct public offering where your stock is sent and offered directly to your fan base or to your customer base, bypassing the middleman going out. Again, why is this important? Let's talk about execution. In my opinion, I had a couple public companies, the OTC. The micro cap execution has two things. One, what kind of investor invests in the micro caps? These are risk takers. These are speculators. These are guys hoping to buy a 10-cent stock that goes to $1. It's not a guy trying to invest in Amazon hoping to earn 8%. So you can't compare the OTC microcap to the New York Stock Exchange. It's an unfair comparison. Same thing in crypto. When you start talking about digital tokens, trying to compare Bitcoin, which to me is like gold. When you compare Bitcoin to Amazon, that's like comparing gold to Amazon, and it completely flummoxes the people who don't understand crypto. So any of you comparing gold to Bitcoin to Amazon, stop it. It just confuses people. Bitcoin's gold. Crypto tokens are tradable assets. Again, I think it's allergies. I apologize that all this is going on. What am I talking about? Let's go back. OTC execution. I'm getting to a point here. Trust me on this. If I want to go public on the OTC, there's a way to execute. In my opinion, it's what I call the 5 Ps. Now, what are the 5 Ps to make a penny stock successful? Well, number one, if we're public, and that's not one of the 5 Ps, but it could be we're public. The first thing you need in that public vehicle is a product. One of my last public companies, we went public on the OTC market before we had a complete working product. Very difficult to raise money in a public vehicle when you're pre-product. Again, not impossible, but I'm going to give you the 5 things that make a project more successful. So the first P is product. Do you have a product that's completed? That could be a technology. It could be a medical device. It could be a gold mine where the product may be the least you have on the mine. Again, I'm making things up, but a product helps. Number 2 is what's called press and PR. That's basically one. Press and PR to me is the second P. Press and PR is very important because if you have a product and can get press and public relations around that, now you have articles which explains your product, explains your offering, and provides some validity or validation around what you're doing. The third P is called promotion. Promotion's different than press and PR. Press and PR is articles and interviews. Promotion are people who are looking to promote your stock into a market. There's all kinds of newsletters, penny stock newsletters, investment newsletters, there's investment clubs, there's market makers, there's people who will promote, often and many times for a fee, but they'll promote your stock and your offering. So that's the third P. The fourth one moves things along very quickly. It's called personality. Can you attach a personality, somebody that's recognizable within that industry? That personality then drives publicity and promotion. And that publicity and promotion, if it drives back to press and PR, the personality drives interest back where somebody's investigating you. And if you have press and PR validating your product in your market, again, we're adding steps of credibility. What's the fifth P? Profit. At some point, companies are supposed to make money. Now, in the traditional OTC sense, you can go public 10 cents, 50 cents, $1, but the goal for many companies is to what's called uplist. Uplist means moving off the OTC stock market, the over-the-counter, up to Nasdaq. And the requirements to, quote, uplist to Nasdaq are sometimes, and I don't remember the requirements, it used to be share price and asset value or capitalization or something along those lines. But basically, OTC companies want to grow up to Nasdaq. Why? 2 primary reasons, very simple. One, institutions, companies with big money can't invest or don't want to invest down in the OTC market. It's too risky. It's too volatile. Again, there may not be audits. So once that company gets up and moves up into Nasdaq, it's a more valid company for the institutions to evaluate. The risk profiles changed, the returns have changed, but so has the due diligence. The second reason is, what do we have? We have institutional money. Oh, liquidity and volume. The number of people trading on the OTC market, the number of investors is lower and smaller than Nasdaq. And Nasdaq's lower and smaller than the New York Stock Exchange. So part of uplisting is institutions can now put money in and you get more liquidity, and more liquidity means more shares, more stock, more potentially ways to make money. All right, so we're 13, 14 minutes into a basic explanation of the financial structures of markets. Any of you that are in the industry, I apologize, you're listening to me going, I get it. Where is this going? Going somewhere very important. Crypto tokens. OTC, right? We have the over-the-counter market and a direct public offering. What's the difference between a direct public offering, which is what we call in the US stock, And what I'm helping create a DTO, which is a direct token offering. Now, again, let's not confuse. Cryptocurrency is not designed to be a currency. Cryptocurrencies are not going to replace fiat. There's certain tokens that may try and perform functions around payment or bank settlement. But let's say crypto tokens and cryptocurrencies have the same correlation as a penny stock. You can list it 10 cents on the OTC, or you could do a 10-cent token on a global exchange. That's what we're helping create. Joined a company called Centurion Investment Exchange. We created a product called Centurion 360. What is Centurion 360? It's the capability and ability for a company to attempt to, quote, go public, but using the token infrastructure as opposed to the US stock infrastructure. Not doing anything illegal. This isn't nefarious. It's just using new technology in a different, unique, and better way. What do I mean by that? We have a company, MonetaPro, MON. Our token symbol is MON for money. Now, I could try and build MonetaPro in the US, which I'm doing. I could try and build the enterprise software platform, which we're doing. We could look at getting acquired, which is our goal, or going public on the New York Stock Exchange in 7, 8, 10 years. Or I could accelerate and try and go public very quickly on the OTC market. Or I could look at doing a token issuance, direct token offering out of Dubai, and market a token to an international base of investors. The international base is a bigger potential liquidity pool of investors than OTC. So let's go through a couple of things. Direct public offering, OTC, penny stock, product, publicity, promotion, personality, and profit. That same architecture and execution can be done on a token platform without some of the structural challenges you might have in the OTC. Again, not doing anything bad or illegal. I like to look at things and go, how does this move forward? If you have a token that's issued on the exchange, you now can market to an international market. You can market to an international base. And if your token project is successful, you can also then potentially pick other exchanges, other jurisdictions, other continents where you may get more liquidity in your stock. Let me again go backwards. This is where this gets technical. The US guys, I want you to understand this. If I list on the OTC, I've got a certain amount of liquidity that's available on the over-the-counter, a certain number of investors. I might dual list. I might try and get listed in ASX in Australia or the TSX in Toronto. But again, it's expensive, cumbersome, timely, time consuming, and you can't manage multiple listings. With a crypto token, it's much more simple. It's a matter of picking an exchange, going through their accreditation process, and a lot of times paying a listing fee, just like you would in the US. But again, it fascinatingly opens differently. I'm going to talk about a project that's going on right now. And I don't believe any of this is confidential. It shouldn't be. But there's two fascinating companies in execution that this has occurred on. One is called eForce, EFFORCE. It's a climate coin. What is a climate coin? I don't know. I met the guys out of Malta. I think it's interesting. But how did they execute? Any of you, again, can look it up. eForce, EFFORCE. eForce partnered with Steve Wozniak. So eForce has a product, their climate coin, and it does something. I've tried to figure it out. I probably should. But then they got some press and publicity, and then they attached a personality and went public on an exchange. Now, I don't know the exact numbers. And again, I'm going to use inside baseball terminology. If I'm doing an OTC, an over-the-counter stock, I want to raise money for the company, I'm going to do what's called a PIPE. A PIPE stands for private investment in a public equity. If I want to raise $1 million for my public company, I'm going to go to the investor, Mr. Investor, and say, hey, I'm going to relist my company, and we're going to price it at 50 cents when we list to the public. but we're going to raise $1 million right now with you at 25 cents. So if you give me money, $1 million at 25 cents, you'll be able to sell, hopefully, the stock at 50 cents. But I also in the US have what's called a 144 restriction. And if you guys that are in the market, you'll get this. Follow me. If you're not, hopefully this is good education. A 144 restriction says if you do invest in this pipe and give me $1 million at 25 cents, you can't sell that stock for 6 or 12 months. It's called a lockup period. The theory being that individual investor or group or company or venture firm or whomever holds your stock. Hopefully, when you list your stock on the exchange at 50 cents, you're able to get liquidity and velocity and traders and hold that 50-cent price point or up. And that gives you 6 or 12 months to execute into that gap. Can you finish your product, get your publicity, attach your personality, and move to profit so that stock maintains 50 cents or higher? The challenge is it doesn't always happen that way. And that investor who clears their, quote, restrictions in 6 months or 12 months now has the stock and can choose to dump it and sell it on the market. So if your stock's trading out here at 37 cents and all of a sudden $1 million comes on at 25 and that investor wants out, it can cannibalize your stock price. But that's the way it works. Tokens are fascinating. You can write the laws and the rules because there are no laws and rules. I don't mean that's bad. I think it's brilliant. Again, retrospective evolution. What we're doing with our Moneta Pro token, our MON, we are raising money. Technically, I'm not doing a pipe. Well, I sort of am, but in the world of tokens, it's called a pre-sale. Pre-sale and a pipe are the same thing. My understanding, again, I'm jumping around, eForce, EFFORCE. eForce launched the token called the WOZX for Steve Wozniak. My understanding, I may be off on numbers, but the structure is the same. They did a, quote, pre-sale. They raised millions of dollars on a token at 10 cents. A pre-sale, pipe, identical. They raised money at 10 cents as a discount. Then they listed the token on an exchange, a crypto exchange, no different than the OTC market exchange. That token listed at 22 cents, I believe, and went to $3. Went actually to about 3.5, $1.2 billion market cap. Now that investor who got in early on the pre-sale, which was the pipe, the discount, private investment, public equity. Over here, it's a private investment, a public token. I can't call it a pipet. That'd be kind of interesting, but the structure is the same. But now the company eForce also, when that stock or token went public, used that offering to raise money. Over here, OTC, give me $1 million at a discount, 25 cents to 50 cents. I'm then going to list my stock at 50 cents and go public and try and raise 10 or $15 million in the public offering. That's the way this works. The direct token offering is structurally identical. If you can launch a token, eForce company had a product, created publicity and promotion, attached a personality with Steve Wozniak. I don't think they're in profit yet, but again, the token went $3.5, $1.2 billion market cap. It's dropped to $1.60. The other day it was trading about $1.05. But how's it different? It's not. Here's where it gets even more interesting. WOZX listed, I believe, again, don't hold me to this. I'm good at getting close to the target, but I'm not always precise. I believe they listed on HitBTC. HitBTC is just another crypto exchange, not any different than E-Trade or Ameritrade or TD, Ameritrade or whatever in the US. If you want to trade stocks, you can sign up to E-Trade and you can buy and sell stocks. If you want to trade crypto, you can sign up to HitBTC and buy and sell crypto. Same thing. Don't confuse it. But now the WOZX is starting to move to different exchanges. They're increasing their liquidity by picking different exchanges around the world. Again, remember, OTC, you're locked to that liquidity. If you can move up to Nasdaq, you can upsell into higher liquidity. In the crypto market, you can move into markets that have liquidity in different areas. Fascinating to do that. What we did with our Moneta Pro token is even more interesting, not even more, but it's interesting in retrospect. So we have a token, the MON, again, stands for money, the first form of barter ever were the Moneta seashells. We've created a monetary platform called Moneta Pro. We have a token, it's priced at 50 cents. So we're raising money in equity, US equity, just traditional. Then we have a MON token that's a gift. We're gifting it to the US investors. They're not investing in a token. We're not delivering the token to them. It's not what's called an airdrop. There's no liabilities. Basically, it's almost like a warrant. It acts like a warrant or a grant, but we're holding this token in a treasury wallet in Malta. Again, this is inside baseball, but I really want the guys that do the OTC markets to understand this. So we're raising US equity and capital. We can bring on US investors for equity. That investor at 50 cents equity gets the grant for a 50-cent token. We hold that token in a treasury wallet, not under a 144, 6 or 12-month hold. There is no 144 restrictions on tokens. The laws don't exist. But again, the downside of a 6 or 12-month token hold is it's based on time. I inverted it. We're holding our token based on price. We're telling our investor, hey, we're going to hold the token in treasury. If and when the Moneta Pro token is listed on the exchange, which will be Centurion first, if and when that token hits 50 cents or higher in a price point, the investor can request delivery of the tradable liquidity asset token, delivered to a wallet anywhere in the world for their jurisdiction, listed on the exchange, not listed, transferred to the exchange and convert out to cash. Technically converts to Bitcoin and cash, but anybody in crypto gets it. This is a dual liquidity strategy, but the benefit with the token hold is you can hold tokens in treasury until it hits a price point on the exchange. Why can you do that? Because there are no laws yet. So again, I'm not trying to do anything illegal. I actually want a great structure. Then with Moneta Pro again, we have a pipe, which technically is a pre-sale. So out of our $5 million institution round, $5 million, 50 cent equity, 50 cent token grant. It's a grant. It's accelerated liquidity. It's not a preferred stock. It's, hey, this is like a public offering liquidity token. But underneath there, we're doing an angel round. Again, you can't bifurcate legal offerings in the US on equity. So the angels in the US get equity at 50 cents. It's a straight round. But we discount the tokens to 10 cents. Why? Because we can. So technically, I'm doing I don't know what to call a split pipe. If we have investors come in, and we've already had several, the angel round gets 50 cents on the equity, the discount at 10 cents on the token. We hold it until the token hits at least 25 cents. I want some accretive in there, but the minute it hits 25, our early investors can get a token and get out. Why is that important? Traditionally, as an angel investor, if I put 25 or 50 or $100,000 in as a startup, I'm an equity holder, an angel investor. There's millions of companies a year that are started. And that angel has equity. And then hopefully that company will raise another round, an A round and a B round and a C round, and eventually go public. And 7 or 10 years later, that quote angel who owned equity gets out. If the company happens to go public earlier, that angel can convert their equity to stock in the offering, the OTC, and get out. If that angel puts that same money in a token, and that token is successful in a list and an exchange, that investor gets liquidity quicker. The token round protects the early investors if you can get liquidity. And yes, it's an if, but it's a big if too, that angel investor in the equity round is actually going to get their money back. 9 out of 10 early companies, startups go broke. Why? Because they don't have money. They don't raise enough. If they could crowdfund for equity, which is under the new Jobs Act, they could crowdfund a direct public offering on the OTC market. Why can't you crowdfund and raise on a token in an exchange in an international market? You can. One more example, and then I'm going to wrap up. There's one going on here. Again, this is one I said I don't think is confidential. Manny Pacquiao, the boxer. Manny's got a fight coming up in July. There's a company, Manny Pacquiao, the personality, just got attached to a hydrogen water. It's a public company right now. I don't even remember the symbol, but it's trading at around 6 cents. Again, OTC, penny stock, 6 cents, no liquidity. It's just there. I made the announcement with Manny Pacquiao. I believe they're going to hand out bottles of water at his fight in July coming up in Vegas, July 2021, for whenever somebody watches this. We're discussing with them to do the same thing with a Manny Pacquiao token, but doing it through Centurion Investment Exchange in Dubai. Why? Manny Pacquiao has a massive following in Dubai. Manny Pacquiao has a massive following in the Philippines, internationally. If you love Manny Pacquiao and you're in the Philippines, you really can't sign up to an American exchange to try and buy a 10-cent penny stock on the OTC. There are very few companies that will trade that stock on the OTC. The registration, the due diligence, the KYC. You're missing the entire global market for a superstar like Manny Pacquiao to potentially do a token offering where now he can market into global jurisdictions. And if he wants to list just on an exchange in the Philippines, you can. If you want to list on an exchange in different countries with the tokens, you can. So looking at the OTC market, I think more and more companies are going to try and go public. And should they wait, I'm going to leave you with this. Again, these are all examples for Inside Baseball. I've been being pitched, I hate the word pitch, but been presented the opportunity to invest in a company called Plaid. And I'm not picking on Plaid. Plaid's great, I'm sure. But again, the numbers are pretty corollary here. It's a $250,000 minimum investment, $19 billion valuation. The projection is they're going to go public in 18 to 24 months. So that's 2 years, $250,000 locked up for 2 years. They're hoping to go public at 42, which means you just about double your money in 2 years. They've already pulled their IPO once. So you have to believe a company's going to successfully grow in 2 years and go public with market dynamics and changes and rules and regulations you just don't know, and you might double your money. But hey, it's a big company being sold by investment bankers and brokers, and boy, they're pushing it hard. My risk profile is a little different. I move money over into a high-risk crypto broker who's trading crypto assets, much like penny stocks. Since January 9th, I believe, we're up 815%. So think about this for a minute. You have traditional investment bankers trying to raise money, $22, $19 billion company, hold for 2 years, you might double your money. Or you put that $250,000 into a high-risk crypto pool, which has a lot of volatility, but a lot of trading and a lot of upside, and you could be up 2, 3, 4, 500% liquid in a short amount of time. I don't think IPOs are going to survive, or they're not going to survive in the structure of where they are now. I truly believe companies are going to go public much earlier. It will benefit the early investors. It will benefit the companies who are able to raise money. It will benefit liquidity across the board. So if you're out there trying to figure out how to invest in Bitcoin, that's great. Bitcoin to me is like gold. If you want to invest in gold and you want a good rate of return, I believe Bitcoin will go from 50,000 to 100 to 200, 500 over time. But for Bitcoin to go from 50,000 to 100,000 and double, that's heavy lifting. But to me, that's low risk. That's like wanting Walmart or Amazon to go up 10, 12, 15, 20, 50%. If your appetite's a little more high risk, you're not going to play the Walmarts of the world. You're going to play the WazXs. You're going to play OTC, penny stocks, things that can go from 10 cents to $1 and give you a massive return. But that OTC stock needs to have execution, needs to have a product, publicity, promotion, personality, profit, and liquidity. That's not the P. We'll have to come up with a P. But again, that upsell in the US, that uplisting OTC to Nasdaq happens differently in crypto, where now you can list across multiple exchanges. All right. That was my education for those, hopefully, that are in the market. You will get that and understand it. The goal is not to do direct public offerings per se, DPOs, but learn how to do DTOs, direct token offerings, and understand the structural advantages of using blockchain as the technology, token as the asset, and liquidity across multiple jurisdictions. Execution's almost identical. It's not executing an IPO at a New York Stock Exchange level company. This is executing an OTC microcap penny stock, where the execution is different, the appetite is different, the risk profile is different. The investor, the speculative retail investor, is down at the OTC level. These aren't the institutional plays. So don't get it confused. People want to compare Bitcoin to Walmart or Bitcoin to Amazon. It's just such the wrong comparison. Bitcoin is gold, cryptos are pennies. If you have an appetite for high risk, high volatility, learn how to invest in crypto. There you go. Stephen Meade, BullsEye Guy. Got another podcast coming up where we're going to explain how to demystify for retail investors with something we call the crypto concierge. But for now, BullsEye Guy, Stephen Meade signing off. Thank you so much.